Okay, so if you track technology trends, you know that the appetite for AI compute power is, well, it's currently unprecedented.
It really is. Off the charts.
And this explosive demand has really clarified a critical market reality, pure speed.
Mhm.
It's just not the key metric anymore.
No, not at all.
Efficiency has basically become the number one commodity in the
Yeah,
entire computing stack.
that's it, exactly. And the sources we're looking at today, specifically this Q2 FYE26 update for ARM, they confirm this efficiency mandate is driving record growth for what's arguably one of the most foundational platforms out there.
Foundational is the right word. So our deep dive mission for you today is pretty straightforward, right?
Yeah, we want to extract the core strategic insights from this ARM update. We really need to understand precisely how ARM is capitalizing on this whole AI boom.
And how that success translates into these just staggering financial results they reported.
Exactly. From the biggest hyperscale cloud provider
Mm-hmm.
all the way down to the tiniest chip in your phone or whatever device.
And the financial results, I mean, that's definitely the place to start. Q2 was their best second quarter ever.
Mm-hmm.
Total revenue hit $1.14 billion. That's a huge jump, 34% year on year.
And it keeps that streak going, right? The third consecutive billion-dollar quarter.
Which signals, I mean, this isn't just like normal growth. This signals a pretty fundamental shift in infrastructure strategy, doesn't it?
It really does. And the reasons, fundamentally, is what they call the compute everywhere mandate.
Compute everywhere.
Yeah. AI needs processing power at every single point in the stack.
Okay.
We're talking about delivering capability, and this is their phrase, from milliwatts in the smallest edge devices
Okay.
to megawatts in the world's largest hyperscale data centers. It's that whole range.
And ARM is, well, arguably the only compute platform positioned to credibly span that entire range.
That's the argument, yeah.
Okay, so let's unpack the constraint here. The thing that makes their approach so valuable right now, because in the data center world, running these huge AI models, it's not just about silicon speed these days.
Not anymore.
It's about infrastructure limits. And those limits, well, they almost always seem to come back to power, don't they?
That is the essential insight. I mean, the sources are crystal clear on this. Access to power has become the main bottleneck, the primary one, especially in these hyperscale data center buildouts.
Right, because when you're deploying, what, hundreds of thousands of new servers?
Exactly. The margin of error for power efficiency just shrinks dramatically. You can't afford waste at that scale.
So, okay, if power access is the big constraint, this is where ARM's competitive advantage really steps into the spotlight.
Precisely. ARM is cited in the materials as being roughly, get this, 50% more efficient than competitive solutions. When you measure performance per watt,
50%, that's huge.
it's massive.
Yeah.
And that efficiency, that's the single biggest driver of their Neoverse adoption in the data center.
Neoverse being their specific architecture for infrastructure, cloud servers, networking gear.
Right, and the validation. It's clear now, the Neoverse compute platform has now surpassed 1 billion CPUs deployed. 1 billion.
Wow. And we should be clear, we aren't just talking about generic chips here.
No.
We're talking about the specialized custom silicon that's powering the cloud giants, AWS Graviton, Microsoft Cobalt, NVIDIA's Grace.
And the new Google Axion, which they highlighted.
Right, Axion. Tell us about that one.
Well, the Google Axion example is maybe the most compelling proof point they offered. Google actually found that their ARM-based Axion chip delivers up to 65% better price performance.
65% better price performance.
Wow, and this is key, consuming 60% less energy.
60% less energy.
Yeah. That level of infrastructural saving, it's just so enormous that Google is now actively migrating the majority of its internal workloads onto ARM.
Okay, when a company like Google, which runs arguably the largest server fleet on the planet, makes that kind of strategic shift,
You know the efficiency mandate has won. It's no longer just a feature.
it transitions efficiency from being like a technical spec to a critical infrastructure cost lever. A huge one.
Absolutely.
Okay, let's pivot then. Let's look at how this operational success, this efficiency advantage, translates into those financials we mentioned. Where's the core revenue stream coming from?
Well, the strength really lies in their foundation, the royalty and licensing engine. That's the core model.
Right.
Royalty revenue specifically hit a record $620 million. That's up 21% year on year.
Okay. And this growth isn't just volume, like more chips shipping.
That's a key point. It's not just volume, it's also pricing. They're actually getting higher royalty rates per chip.
Ah, okay. So maybe unpack that for the listener. Why do these latest chips command a higher royalty than, say, older generations?
Good question. It's mainly driven by the adoption of their higher value architectures,
Yeah.
specifically ARM v9,
ARM v9.
and
Okay,
also their new compute subsystems, or CSS, which we should definitely talk more about.
we will. But first, ARM v9. Why is that higher value?
Well, ARM v9 chips incorporate really critical advanced features. Things like better security partitioning, crucial these days, and also the scalable vector extension, SVE.
SVE. That's important for AI, right?
Essential. It's key for accelerating AI and machine learning workloads. So because this IP is demonstrably more valuable and frankly necessary for modern computing,
They can charge more for it. Makes sense.
they command a higher royalty per chip. And importantly, linking back to the data center, Neoverse royalties, the ones from cloud and networking, more than doubled year on year.
Doubled.
Yeah. It confirms that their cloud and networking market share is climbing fast. It used to be around 10% of their total royalty base. Now it's trending towards 15%, maybe even 20%.
Okay, a significant shift in the revenue mix towards infrastructure.
Definitely.
And what about the other side of the coin, the licensing revenue?
Also very strong. Licensing and other revenue jumped 56% to $515 million, which basically reflects really high demand from companies wanting access to design chips using these next-gen architectures. They want the blueprints.
Got it. Now, beyond the pure financials, we also saw some pretty significant strategic moves this quarter. Partnerships, acquisitions.
Yes, the strategic partnership with Meta is definitely notable.
Meta, okay. What's the focus there?
The focus is squarely on scaling AI efficiency across every layer of Meta's compute environment. So think from their massive data centers all the way down to potentially AI-enabled wearables.
Interesting. Covering that whole spectrum again.
Exactly. And then, of course, you mentioned acquisitions and partnerships. There's the
Yeah.
elephant in the room, the SoftBank connection.
Ah, yes, the Stargate initiative.
Right. The reported, what was it, $500 billion project
Yeah.
involving SoftBank and OpenAI, designed to build this global network of next-gen AI data centers.
So how does ARM fit into that picture based on this update?
Well, we saw a pretty material step up in related party revenue this quarter, tied largely to SoftBank. And this huge Stargate build-out, it provides a really unique, potentially highly profitable opportunity for ARM to essentially serve as the foundational supplier for the entire compute stack in these new data centers.
The whole stack.
Meaning processors, obviously, but also networking components, and maybe even power distribution systems. They're basically positioned as the key R&D partners for the architecture that could define the next decade of AI infrastructure.
That's a huge opportunity. And related to that, to make sure they capture the networking piece of that pie,
Yeah.
we saw the announcement about acquiring DreamBig Semiconductor.
Right.
Why is that acquisition strategically essential right now? What does DreamBig bring?
Yeah, that's a very targeted, very specific acquisition. DreamBig focuses on IP, intellectual property around Ethernet and RDMA controllers.
RDMA, remind us.
Sure, RDMA stands for Remote Direct Memory Access. Basically, in these massive AI clusters, you have thousands of GPUs needing to talk to each other almost instantly. You just can't afford latency.
Right.
RDMA technology lets systems bypass the main CPU and move data directly between the memory on different machines, super fast.
Crucial for speed in those big clusters.
Absolutely crucial for high-speed scale-up and scale-out networking within these enormous AI data centers. So acquiring DreamBig shows ARM is really integrating vertically, trying to secure the entire infrastructure stack, not just the CPU core.
Makes sense. Okay, let's talk more about the deeper integration strategy. You mentioned compute subsystems, CSS, driving higher royalties earlier.
Yes.
For the listener, maybe explain again. How does CSS fundamentally change the game for ARM's customers, the chip designers?
Right. So CSS is essentially a highly optimized, pre-integrated block of ARM's IP. It includes the core processors, the memory systems, the interconnect fabric, all designed and validated to work seamlessly together.
So it's like a pre-built engine block instead of just selling the parts.
That's a great analogy. Think of it as giving chip makers a much better starting point.
Yeah.
Because look, modern chip design, the complexity is just exploding. The costs are exploding. By providing this validated subsystem, ARM drastically cuts down the customer's development cycle time. And maybe even more importantly, it significantly reduces their execution risk. Less chance of things going wrong late in the design.
And it seems the market wants that risk reduction. They reported, what, 19 total CSS licenses signed?
19 total,
Yeah.
across 11 different companies already. The demand, they said, exceeded their expectations.
And what's the visible result? Can we see the impact on actual devices?
Yeah, the impact is pretty impressive. Samsung, for instance, they leveraged CSS for their Exynos chipsets.
Right, in their phones.
Exactly. And they reported up to a 40% AI performance improvement over previous Exynos generations that didn't use the subsystem.
40% AI boost from using CSS. Wow.
Yeah. And now, the top 4 Android phone vendors are apparently shipping devices powered by CSS. So it's getting out there.
And they just launched a new one, right? Lumex CSS.
They did. Lumex CSS. It's their new advanced mobile compute platform, designed specifically to handle those really complex, rich, on-device AI features. Things like real-time translation, advanced image enhancement, stuff that needs serious local processing power, but also efficiency.
Okay, so that shift brings us perfectly from the megawatt scale of the cloud
Right.
down to the milliwatt scale of the edge device. AI functions are clearly moving closer to the user onto the device itself.
They have to, really.
Yeah.
Especially if you want AI applications that are fast, responsive, and also maintain privacy. Processing locally helps with all that.
And the smartphone is the perfect battleground for this.
It really is. Look at the new Google Pixel 10 they mentioned. It features the ARM-based Tensor G5 chip.
Okay.
And that chip can run large language models, the kind of AI we're talking about, up to 2.6 times faster.
2.6 times faster.
And crucially for a phone, twice as efficiently as its predecessor.
Twice the efficiency. On a battery budget, that's everything.
It's the difference between a feature that works and one that drains your battery in an hour. It makes it functional, not just a demo.
We see that same intense focus on efficiency in arguably the most complex, safety-critical edge applications too, like automotive.
Absolutely. The automotive sector is a prime example. Tesla's next-generation AI chip, the AI5, is ARM-based.
Right?
And it apparently delivers up to 40 times faster AI performance for their intelligent driving features. 40 times.
Incredible. So whether it's your phone in your pocket or the computer in your car?
The requirement is basically the same.
Okay.
You need highly performant AI, but it's always constrained by its operating environment. Power, heat, physical space.
Which makes power efficiency the defining feature, again.
It always comes back to efficiency, yes.
Now, underpinning all of this hardware success, all these design wins, you can't ignore the software side, right? The developer ecosystem.
Oh, absolutely not. That massive developer ecosystem, it's like the engine's flywheel. It keeps everything spinning.
How big are we talking?
ARM boasts over 22 million developers using their architecture. 22 million.
Wow.
Which they estimate represents over 80% of the entire world's developer base.
80%, so total saturation almost.
Pretty much.
Yeah.
And that saturation ensures that every time ARM launches a new device or a new architecture, it finds immediate, broad software support, which in turn fuels more hardware demand. It's a virtuous cycle.
Okay. So looking forward to capture all these future opportunities, which, as you said, they admit have only gotten bigger and accelerated since that Stargate idea was first floated.
Yeah, about 11 months ago.
ARM is dramatically accelerating its own investment, its R&D spending.
They are. Operating expenses for R&D jumped significantly to $648 million in the quarter, up 31% year on year.
That's a big jump in spending. Is it just more of the same, or is the strategy shifting?
It seems like that accelerated R&D spend is highly intentional and part of that deeper integration strategy we discussed. They're investing heavily, they say, to explore moving beyond just core IP licensing into potentially selling pre-verified components themselves, things like chiplets or even complex system-on-a-chip SoC designs.
So moving up the value chain, essentially.
Exactly. To give you a sense of the scale of investment needed for something like CSS, that Lumex CSS project we mentioned,
Yeah.
that alone required, according to them, 1,000 man-years of engineering effort.
1,000 man-years.
And hundreds of millions of dollars in direct investment. So this capital outlay, this increased OpEx, it's really a response to the market pulling them towards deeper, more integrated, higher-value solutions. They see the demand trajectory.
Okay. So let's try and bring this entire deep dive full circle for you, the listener. ARM's really impressive financial success right now seems rooted in this kind of dual strategy. On one hand, they're pursuing high-value licensing for these super efficient architectures like ARM v9, getting higher royalties.
Sticking to their core model, but enhancing it.
But at the same time, they're offering this deeper risk-reducing integration through things like CSS and maybe even chiplets or SoCs down the line.
Yes. offering more complete solutions.
Which means they maximize their returns kind of regardless of whether the AI processing happens in a giant cloud cluster or right there on your low-power device. They win either way.
That seems to be the strategy. And if you want a measure of just how durable this success might be, how sticky their position is, look no further than the royalty stream itself.
What about it?
They shared an amazing stat: approximately 50%, half of their current royalty revenue comes from products that were launched 10 or more years ago.
10 years ago, still generating half their royalties.
Yep. That kind of longevity just demonstrates their sustained relevance quarter after quarter, year after year, across constantly evolving market cycles. It's quite remarkable.
It really is. You know, what really stands out here, wrapping up, is how the whole calculus for the future of computing seems to have fundamentally changed.
How so?
Well, if ARM's competitive advantage is genuinely, say, 50% better efficiency, like the sources claim, and we agree that power access is now the ultimate bottleneck, especially for AI,
Right.
then think about the long-term impact. Not just on chip design, but on global operating expenditures, on the energy bill for running AI inference 24/7 globally.
It's a staggering cost.
So does this mean the primary metric for all future hardware development, maybe for the next decade, shifts entirely away from just raw speed or gigahertz and completely towards minimizing infrastructural costs?
You mean cost in the broadest sense,
Yeah.
including environmental impact, energy budgets.
Exactly. Measuring performance not just in speed, but in how little it costs environmentally and financially over its entire lifespan. Maybe that cost imperative, driven by power constraints, is now the single most compelling force driving innovation in computing.
That's a really powerful thought to end on. Efficiency isn't just nice to have anymore, it's survival.